Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com. It is Friday. It's been a long week. Let's get this casual morning call going. As you already know, we've had some earnings out this morning after closing at all-time highs. Google out, all-time highs right now indicating around 970. CMG out, positive. GE strong, up. Morgan Stanley also up. And, it's funny. I came in today, people were like, what's going on with this market? Yesterday we were down and reversed on negative earnings from like an eBay and an IBM and a Goldman Sachs. And then today we're up, with good earnings. They're like, so what do we go up on bad news and go up on good news? And I'm like, I'm not arguing. I'm just, looking for individual plays, and these things continue to work, and there's no reason to fight this tape. We've had a very strategic move since last Wednesday. You look at the chart of the S&P, and you could see exactly how you could have navigated this technically. Here is one false breakout that led to a move lower. Here is another false breakout with that head and shoulders top that led to a move to the trend line. Another false breakout, but each way there were tradable moves. So right here, you had another tradable move to the downside. So what happened? Red dog reversal, gap and go with power through a downtrend. From there, follow through. Then what did we do? We digested higher. Then you had the pre-deal move to then almost, people thought could have been priced in, maybe not. We went from negative to positive and pushed to all-time highs. And now we are opening at all-time highs. So with that being said, what do we know here? We don't know much. We know 1733. That is now your resistance pivot. I think last time we got to above 1700, I was asked on CNBC, where can we realistically go now after another digestion phase? I've said probably 1740 to 1760, and it looks like, we could be getting there at some point next week. So with that said, markets continue to, around the world, rally as well. You're not going to have the strength that you have each and every day, but we're seeing it in individual names. There's still lots of room left, lots of nice setups every day and off the charts every day. In the price points, you were looking for action. Google came out with earnings. I have to say that there was a big call on the chat room, and it wasn't by me. It was by Durant, who is one of the guys that just likes to participate, which is what a lot of our people on the chat. We have a lot of great guys on there putting their ideas in. They're like, what? He's like, I like Google into earnings. I was like, okay, what? I kind of been trying to trade it. It hasn't worked. I would be really upset if Google comes out with a good report, but there's a lot of negativity around it. And, if I didn't have a position in it, because I tried having a position in a few times. So what do I do into earnings? If which I don't take stock, because I've just, that's one of my rules. Took some options. So people at 3 o'clock saw me take options. They heard RD. Other people started taking it. And, lo and behold, you look at Google now, it's trading at, I believe, right around 970. And, made a little bit of sense thinking about institutions had been accumulating this stock for 7 months with no traction. So with that said, some people after hours, you had time to buy this thing at 927. Okay, that was the prior pivot. There are two of them, one here, and now we're there. So let's get away from that. All right, Apple real quick, still is, grinding higher. This was that lower level. Here was the move after earnings. Tradable move to retest it, and then since then it's been crawling higher. Not the same Apple, but, we talked about right in here taking a call spread. I went with the 95s and sold the 100s that get expired today, so I'll have to look for a new strategy next week. If you were sitting in the stock, you're also doing okay. It's opening up. Your next spot here is 507, which is above. If it stays above 507, that next little spot is 513. Earnings of next week, we'll address it then. Amazon, definitely shook some guys up on the floor because they were holding it, and with eBay's down move, it got a little pressure, but then it went green. You look at the chart of Amazon, you can see that here's that inside flag, started to trade above it. That's what, 311, and now I think it was upgraded this morning. This is your next point of reference right here around 322. So I would trim and trail it and see how it, handles that little area there. Netflix also on its way, continuing. Yesterday broke above, so if you took it home long, you're probably getting paid above, highs here of 334. Overall, yes, it did break down, but then it came back up, traded through this halfway point that if you were a bear, that's probably where you had to cover. That was your spot. If you didn't, you have some choices to make. As far as some of the banks, Morgan Stanley's out. It's up $1. This is your prior level on Morgan. See if it could get through and stay above it. Not sure if there's going to be that much opportunity there today, but here is that spot. It's a 29.50. It's already above it, so that's giving you a decent sign that banks could make new highs. So if this holds above it, that might bode well for one of my favorites, which I'm in, which is Bank of America. Let's see if Bank of America could trade through this downtrend. It's got to get above 1480 with authority to then make new highs, which I think it's only a matter of time, in my opinion, that it gets above this 15 and heads. This thing, no reason why I can't see 16 this year. I think for my target for next year is probably going to be about 18 to 22. Overall, acting well. I guess also see how JP Morgan reacts. This head and shoulders pattern that everyone was so scared of, got negated. This was your red dog reversal that wound up being a good cash flow trade, and then here is when this downtrend broke to the upside, and now it's on its way. So get rid of the negativity there. There's a lot of people. I still see so many people are so upset with the market. They hate it, they despise it, but that's only because they haven't figured out their approach. I talked about yesterday how you could be frustrated with Washington, but you can't control them. You could be upset with the fearmonger headlines, catastrophic, scenarios that people have talked about, but they're only headlines. Until you really look in the mirror and say, who can change my process? And that's me. Be more upset with yourself if you're not having as good of a run as you think you should. Be upset with yourself if you've been fighting the tape this year. Be upset with yourself if you've been pointing fingers everywhere else, but it's yourself, because that's the person who pushes the keyboard. And I'll tell you right now, there's still time left this year, there's time left next year, there's time left the year after that to work on your process and start figuring things out. Because once you do, you won't be pissed off at the market, you won't be pissed off at the world. You'll be excited and you'll be embracing the opportunities that are in front of you that present themselves each day. We try and uncover them for you. The chat room has a lot of guys on there all day long talking about what they're seeing, trying to contribute, trying to add value, and they do. It's a community right now that is trying to learn and grow together, which makes me proud. I was overseas. It held my hand while I was in an environment that I was unfamiliar with. So, let it hold your hand, if you're trying to breed confidence in your own trading and your own self. So with that said, there's going to be, I don't know exactly how we close today, and I wouldn't just go all in and start chasing things now. But, if you're upset with where you stand, write down a new set of goals and perhaps situations you want to change in your life in the market, and start making small steps. Because if you make small steps, they become bigger steps, and then maybe you'll be in a spot that's a little bit more conducive for you to approach the market with a plan, which is the way we try and advocate. It's Friday. It's been a long week. It's option expirations. We have a whole nother week of earnings. Look for Off the Charts, our new version on Sunday night. And just, try and relax a little bit. Don't take it too personally. It's not a personal thing as far as the market's concerned, as far as the world's concerned. But it's up to you to make those changes in order for you to, again, move in the right direction. Scott Redler, T3 Live, the morning call. Don't chase things today. Trim and trail your positions and stay opportunistic.